Hello and welcome to car landing cost demonstration. Okay, a basic question: what a landing cost is. Now, if you do imports and you have stock module enabled in your QuickBooks, then landing cost is a must-have software. Now, I'm sure you will better understand what I'm talking about if I show you a small example. Now, I've got my supplier and I've got this bill that I purchased and I import from overseas these 10 of those laptops and 10 of those monitors, and this price, this is the net factory price that I purchase. So from the other hand, I've got these clearing and forwarding expenses from my agent that I've got 705 euros expenses related to my import. In addition, I also have transportation expenses, 200 euros. Now, if I make a profit and loss report, now you can see that all these expenses appear in my profit and loss, which is wrong, because all these expenses should be adjusted on the item cost price and not appear in my profit and loss. So this is the main reason I'm using the landing cost. If I go to the landing cost here, I can find my import by going to find bill, enter the bill number, the system will interact with QuickBooks. We try load the bill. Here is my bill, load bill and close. And in few seconds, I'm gonna have the bill in this screen. Okay, here is my supplier bill with the items I purchased. Remember that this is the net cost coming directly from my supplier. But I've got some additional expenses related to this import. So I'm just coming to attach bills, find my, let's say, the clearing forwarding agent, refresh to load all bills here, select the bill expense related to my import, say attach bill, go find the transportation expenses or any other expenses we want to attach to this import, attach bill. Okay, now I've got the two bills, one from my clearing and forwarding agent and the other one from transportation office. I just click on the first one and I can see that there are two expenses. Now I can select all or one of the expenses I want to attach on this bill. Just select the first one, click attach, second one, click attach, select the second bill. We list all the details, select, attach. Now pay attention to the green column here. I can do groupage. That means the bill is for this expense line is for 500 euros. I can select only 200 or a different amount than the 500 euros. For the purpose of this demonstration, I'll just keep same values to be calculated. Now click calculate and then click apply. This is not a reversible procedure, so a backup is recommended before you go ahead. So just click yes. Now, what the landing cost will do now, will take all these amounts, will recalculate against the line quantities and total, and will adjust the amount, so the cost, according to these expenses. So okay, it's finished. Just go back to QuickBooks, find the supplier bill, and you will see that It's not 400 euros anymore, it's not 100 euros anymore, the amount is different, and it contains the total of all expenses attached to this bill in my total line amount, and all the expenses have been credited to the expense tab module here. So it's still 5,000 euros, and I still have the transportation office bill and the clearing and forward agent bill. So if I just run a report, you will see that all these profit and loss expenses, clearing, forward and clearing expenses, and transportation expenses disappear, which is correct. Why? Because all these expenses amounts have been adjusted and have been changed the average cost of this particular item. So if I now run a stock valuation detail report, you will see that the average cost of this item is the correct one and contains all the expenses related to my import. Now, what else? If I just go back to the landing cost, I can also change item prices based on the average cost. So I can select show stock parts. This will interact with QuickBooks and load all the items listed in my QuickBooks item list. I can select the items I want. Down at the bottom, I can select to adjust the sales price by 30% based on average cost, which is the latest cost in my stock. So if I click adjust preview, you will see that the cost price is 400 euros. This is the cost price directly come from my supplier. The average cost is 464. The current sales price is 603, which is the same actually, and the new sales price is 603.20. Now let me change the sales price to something else and see the difference. I just come back here to the item price. Let's put the old price 500 euros. Okay, and the old price here 150, 120 euros. Okay, now let's go back to the landing cost change item utilities. Let's refresh the screen. Okay, just select the items you want. Okay, this is the cost price. This is the average cost, the latest one, and this is the current sales price. So according to my selection, adjust sales price 30% based on average cost. Now I've got the new sales price. When I click OK or apply, will apply in QuickBooks item list. So click apply. Yes. Again, this is not a reversible procedure, so a backup is recommended. Now the landing cost change item prices utility will adjust the new sales price based on my criteria. So if I just go back to QuickBooks and check the new sales price, which is the correct one, 30% on average cost, and sales price for this one, 30% on average cost. Now, if I just go to reports company and financial, still nothing here, but see what's happening if I create an invoice. Let's say I create an invoice 31st for this client and select this item and this item with the new prices, of course. Save and close. Now go back to the profit and loss. Here is my sale, and here is the cost of goods sold that contains the exact average cost deducted from my stock asset. So if I just go to the invoice and see what's going behind the journal, you will see that this is my sale, and pay attention here, 464 is being deducted from my cost from my asset, and 116 euro has been deducted also. And if you want to run a stock valuation detail, Okay, this is the average cost also be deducted. So the landing cost is doing two major things. First, you have the ability to relate all expenses related to the import, adjust the item average cost together with the new expenses arise from that import. So the profit and loss is clean from import expenses and transportation expenses. And also when you sell something, the cost of goods sold is contains the correct value. That's the latest average cost. And you can also adjust the item prices based on the latest average cost. That's all. Thank you very much for watching.